The importance of having a bulletproof operating agreement. Let me preface this with a hard truth. A handshake isn't enough. One bad partner dispute, one unexpected exit, or one lawsuit can destroy your business if your operating agreement isn't bulletproof. Most business owners use generic templates or skip operating agreements entirely. But when things go wrong, and they will, that piece of paper is the only thing standing between you and total disaster. Let me tell you why you should listen to me about operating agreements. I'm with Numeratus, and we're not your typical accounting firm. Most firms just file your paperwork and move on. We've been helping business owners build bulletproof operating agreements that actually protect them when things go wrong. We've seen businesses torn apart by partner disputes because their operating agreements were vague or missing key protections. We've written dozens of operating agreements after clients got burned by generic templates that didn't address the specific situations that would happen in business. And we've helped clients avoid disasters by building proper agreements before problems arise. Here's what most people don't understand. An operating agreement isn't just a legal formality. It is the foundation of your business protection. Without a proper operating agreement, your LLC protection can be worthless. Your partnership can fall apart, and your business can be destroyed by disputes. We built our practice around helping business owners build comprehensive protection systems, and a bulletproof operating agreement is the cornerstone of that protection. Now, if you're watching this, you probably have an LLC or are thinking about forming one. Maybe you skipped the operating agreement entirely. Maybe you have one, but you're not sure if it actually protects you. Here's what I'm going to show you in this video. Why operating agreements are critical, the mistakes that destroy businesses, what a bulletproof operating agreement actually includes, and most importantly, how to make sure yours actually protects you when you need it. But here's what's really going to shock you. The biggest threat to your business isn't external, it's internal disputes and partner conflicts that destroy businesses from the inside out. So let me show you exactly what's at stake. Problem number one, the generic template disaster, why templates fail. Let me tell you about a business owner who we can call Tom. Tom and his business partner started an LLC together. They were friends, they trusted each other, and they used generic operating agreement templates they found online. It was free, it looked official, and they thought they were covered. 3 years later, they had a major disagreement about the direction of the business. Tom wanted to expand aggressively, and his partner wanted to stay conservative. They couldn't agree, and their operating agreement didn't have any provisions for resolving disputes or buying out a partner. Their business grew to a halt. They couldn't make decisions. They couldn't move forward. Eventually, they had to dissolve the entire business and split the assets. Years of work destroyed because their operating agreement was worthless. Here's what makes generic templates so dangerous. These one-size-fits-all frameworks don't address your specific business structure, don't account for your unique partnership dynamics, don't include industry-specific protections. They don't reflect your actual agreement and your intentions. They miss critical provisions. There's no dispute resolution mechanism. There's vague profit and loss distribution rules. There's no buy and sell provisions for partner exits. There's no protection for minority owners. There's no succession planning. They don't protect your LLC status. Courts can pierce the corporate veil if your operating agreement is inadequate. Generic agreements don't prove you're operating as a real business entity. Missing provisions can destroy your legal protection. Are you using a generic template for your operating agreement? Most business owners are, and they have no idea how exposed they really are. Now, despite what you've been told, using a generic template is just the beginning of the problem. There's another critical issue that destroys even more businesses. Problem number two, the partnership dispute nightmare when partners turn on each other. This is where operating agreements become truly critical. Even the best partnerships can fall apart. Without proper provisions in your operating agreement, disputes can destroy your business. We've seen businesses destroyed by 50-50 ownership deadlocks where partners can't agree, minority partners being squeezed out unfairly, majority partners making unilateral decisions, partners taking money or assets without agreement, partners competing with the business, partners refusing to contribute their share of work or capital. Let me tell you about a business that almost collapsed because of a partnership dispute. Two partners owned a successful e-commerce business, 50-50. They had an operating agreement, but it didn't include any dispute resolution provisions or deadlock breaking mechanisms. When they disagreed about a major business decision, neither could move forward without the other's approval. The business was paralyzed. They couldn't hire, couldn't spend money, couldn't make any decisions. Eventually, they had to bring in lawyers and mediators, which cost tens of thousands of dollars. Here's what makes partnership disputes so dangerous. It's the deadlock situations. The 50-50 ownership with no tiebreaker. Major decisions requiring unanimous consent. There's no mechanism for resolving disputes. Business operations grind to a complete halt. There's unfair treatment. Majority partners abusing their power. Minority partners being excluded from decisions. Unequal distributions of profits or work. No protections for vulnerable partners. Then there's competing interests. Partners starting competing businesses, partners taking business opportunities for themselves, partners soliciting customers or employees. No non-compete or no non-solicitation provisions. Does your operating agreement include specific provisions for resolving disputes about preventing deadlocks? But after learning the fundamentals, there is one thing that people completely neglect, and it is something that should be one of the most important things to you when building a business. It's understanding what happens when a partner wants out. Problem number 3, the exit strategy disaster. When partners leave, this is where businesses face their biggest operational crisis. What happens when a partner wants to leave, dies, becomes disabled, or gets divorced without proper buy-sell provisions in your operating agreement? The answer is chaos. We've seen businesses destroyed by partners selling their ownership to competitors or strangers, deceased partners' ownership going to family members who don't want to be involved, divorcing partners' ownership being awarded to their ex-spouse, partners demanding unrealistic buyout prices. There's no funding mechanism to buy out departing partners. Let me tell you about a business that almost collapsed because of a partner exit. One of the 3 partners died unexpectedly. The operating agreement didn't have any buy-sell provisions or succession planning. The deceased partner's ownership went to the spouse, who had no interest in the business and no experience in the industry. She wanted to be bought out immediately for an unrealistic price. The remaining partners couldn't afford to buy her out, and they couldn't operate the business effectively with an uninvolved owner. Eventually, they had to take on debt to buy her out, which nearly bankrupted the business. Here's what makes partner exits so dangerous. No buy-sell provisions, no mechanisms for buying out departing partners. There's no agreed-upon valuation method, no funding source for buyouts, and there's no restrictions on who can become an owner. Triggering events not addressed. Death of a partner, disability or incapacity, divorce, bankruptcy, voluntary exit, termination for cause. The valuation disputes. There's no agreed upon method for valuing the business. The partners demanding unrealistic prices, the costly business valuations required, and disputes over what's included in that valuation. Does your operating agreement include comprehensive buy-sell provisions for all possible exit scenarios? Most operating agreements don't. And when a partner exits, the business faces a crisis. Now, this next step I'm about to share with you is possibly one of the most important things to do when it comes to business protection. And yet it is one of the most people disregard the importance of the most. And it's understanding how operating agreements affect your taxes. Problem number 4, the tax election trap. When your agreement doesn't match your taxes. This is where operating agreements create unexpected tax problems. Your operating agreement needs to align with your tax elections and how you actually operate the business, or you can face serious tax consequences. We've seen businesses face tax problems because the operated agreement profit distributions don't match tax allocations, the S-Corp elections conflict with operating agreement provisions, partnership tax rules violated by operating agreement terms, the IRS challenges business deductions because operating agreement doesn't support them. Here's what makes tax alignment so critical. Profit and loss allocations. They must follow substantial economic effect rules for partnerships. The S-Corps have strict distribution requirements. The operating agreement must match actual distributions. And the IRS can recategorize distributions if agreements don't support them. There's tax election issues. The S-Corp election has specific ownership requirements. The partnership tax treatment requires proper operating agreement. Single-member LLCs need proper documentation. The tax elections must be reflected in the operating agreement. Deduction support. Operating agreements must support business expense deductions. Salary versus distribution decisions must be documented. The business purpose must be clear in the operating agreement. The IRS audits looks at the operating agreement to verify business legitimacy. Does your operating agreement align with your tax elections and how you actually operate? Most operating agreements don't, and this creates tax risks that most business owners don't even know exist. Now that we have everything we've talked about settled, the next step is by far the easiest process, yet most people overcomplicate it, building a bulletproof operating agreement. Solution number 1. Essential provisions every operating agreement needs. Here's what a bulletproof operating agreement actually includes. These aren't optional, they're essential for protecting your business. It's the ownership and capital contributions, clear ownership percentages for each member, additional capital contribution requirements, consequences for failing to contribute, how ownership can change, management and decision making, who has authority to make decisions, what decisions require unanimous consent versus majority vote, the day-to-day management authority, major decision thresholds, deadlock resolution mechanisms, profit and loss distribution, how profits and losses are allocated, when and how distributions are made, tax distribution requirements, retained earnings policies, special allocation rules if applicable, buy-sell provisions, triggering events like death, disability, divorce, bankruptcy, and then there's voluntary exits. The valuation methods. Is it a formula? Is it an appraisal? Or is it an agreed value? The payment terms and funding mechanisms, the right of first refusal, drag-along or tag-along rights. There's dispute resolutions, mediation requirements before litigation, arbitration provisions, buyout rights in the case of irreconcilable disputes, non-solicitation of customers and employees. There's confidentiality requirements and an intellectual property ownership. With all the right provisions, there's one more critical step that most people miss, and that's solution number 2, customization for your specific situation. A bulletproof operating agreement isn't just about having the right provisions, it's about customizing them for your specific business, industry, and partnership dynamics. There are industry-specific provisions. Real estate businesses need different provisions than tech startups. Professional services need compliance and licensing requirements. E-commerce need provisions for inventory and supplies. Content creators need IP ownership and revenue sharing provisions. There's partnership dynamics. Active versus passive partners need different rights. There's unequal ownership that needs to be socialized with protection. Unequal ownership needs special protections. Family businesses need succession planning. Silent investors need different provisions than operating partners. And then there's business stage considerations. Startups need provisions for future funding rounds. Established businesses need exit planning. Growing businesses need provisions for adding partners. International businesses need provisions for foreign ownership. For E2 and EB5 visa holders, operating agreements must support visa requirements. They must show active management and control. They must document business purposes and operations, and they must align with visa application representations. The next part can take you from being someone who just has an operating agreement to someone who uses it as a strategic tool. And it's something sophisticated business owners do automatically. And that's solution number 3, regular review and updates. A bulletproof operating agreement isn't a one-time document. It's a living document that needs to be reviewed and updated as your business evolves. So when do you review your operating agreement? Annually, as part of regular business planning? When adding or removing partners? When business structure or operations change significantly? When tax elections change? When entering new markets or business lines? After major business milestones? What's there to update? Ownership percentages after changes? Valuation methods as business grows? Management authority as roles evolve? The distribution policies as profits change? Also, buy-sell provisions as circumstances change. Work with attorneys who specialize in business law. Coordinate with accountants to ensure tax alignment. Review with all partners to ensure agreement. Document all amendments properly. Maintain compliance. Keep signed copies of all revisions. Document all amendments with proper signatures. File amendments with the state if required, and ensure all partners have current copies. Review them regularly to ensure you're following the agreement. Look, your operating agreement is the foundation of your business protection. Without a bulletproof operating agreement, your LLC protection can be worthless. Your partnerships can fall apart, and your businesses can be destroyed by disputes. Every day you operate with a weak or missing operating agreement, you're risking everything you've built. Every dispute, every partner exit, every crisis without proper provisions can destroy your business. But the good news is that a bulletproof operating agreement is achievable when you work with professionals who understand business law, tax implications, and your specific needs. You just need to take action before problems arise. If you have an LLC or partnership, if you want to make sure your operating agreement actually protects you, and if you want to build comprehensive protection systems that work when you need them, you need professional guidance. At Numeratus, we help business owners build bulletproof operating agreements that combine legal protection, tax optimization, and practical business operations. We don't just use templates. We build custom agreements that actually protect your specific situation. We work with business owners and we work with law firms who understand that proper documentation isn't optional. It's essential for protecting everything that you've built. If you want to learn more about what a bulletproof operating agreement includes, how to customize it for your specific business, and how to build comprehensive protection systems, visit numeratus.us or contact us directly. Don't wait for a dispute or crisis to learn that your operating agreement is worthless. Build proper protection now before you need it. Because remember, in business, partnerships can fall apart, partners can leave, and disputes can arise. Make sure your operating agreement protects you when it happens.